Okay, we are live once again. Let me check if everything works and I will wait for the first people to join to start off with today's live stream. Let me check it out here. Bitcoin. Yes, amazing. Everything seems to be working once again. So, for the first people dropping in, welcome. It's good to be back. Good to be back after a few days off, basically the week off. I've been busy and also not that much has been happening, I must say, because of the U.S. government shutdown. Normally, I was live streaming, of course, all of the economic data, but now that isn't possible because we have the shutdown. But today we finally have some important stuff coming up again. We have the Federal Reserve Digital Payments Conference incoming, and yeah, I'm basically very curious of what this is exactly going to be, how this is going to look like. But I did hear that it is going to be Bitcoin and crypto focused. So that's of course going to be quite interesting, and let's see about exactly that. We will be live streaming the event here. We can watch this live stream here basically, or not mine, but this one from the Federal Reserve itself. So yeah, let's see if it's going to be something interesting. It's been a long time. It's been about 6 days I was live for the last time. Yeah, quite a long time actually, but also not that long, what I understand. But like I stated, not that much happened. We saw a major market correction, but yeah, there is not much data coming out or stuff like that. It's hard. How are you doing? I'm good. I'm very good. How are you? How are you doing? The last time we were live was actually during the Powell speech, I think. That was the last time. And I think I will be taking some time before the conference is going to start in 30 minutes. It will be starting in 30 minutes. So we have some time to dive into some charts, to do some market analysis, and just I will give my thoughts on the current market, how I think Bitcoin is looking, how I think Ethereum and altcoins are looking. And then over 30 minutes we can drop in the digital payments conference. Like I said, I also don't exactly know how this is going to look like, what they're exactly going to discuss, but it should be crypto, Bitcoin and crypto focused, or stablecoin focused. Let's see how it's going to look like. Sell everything, enter one array. I don't think that is going to be a good idea now. Um, but yeah, let's discuss some charts. We also discussed in this morning update video before we are going to get the conference, because I have seen some, or I'm spotting some interesting signals in the market with of course gold. I actually 5 minutes ago I saw on my phone that gold is coming down ever so slightly. I think it's now 5% down since the yeah, indeed, since the all-time high. So maybe let me open another trading view so we can track gold, because I think this gold uh, local gold top, it seems like, could be turning out very bullish for Bitcoin in the end. Let's see. I've been making some videos about this also, but yeah, gold is definitely seeing an ejection now. Also, the weekly candle turned red here, so that's quite interesting. Unfortunately, my trading view is a little bit slow because of the Wi-Fi, but let's hope it's not going to hinder the stream too much. Um, yeah, look at that. Big red daily candle for gold, and let's see how it looks like on the hourly. Good morning, bye. Good morning. Dumptober this time. Let's go to Pumpvember and Bullsember. Let's see. We still have 10 days left in October, so the month could still be turning red. Somewhat of a McDonald's pattern for gold here. Interesting. Very interesting. I think we basically just did not make new all-time high, so we did came very close. Now yet again another rejection for gold, and like we have been stating, that is something I wanted to discuss in all of the previous update videos, and definitely this one. Let me pick it out here. Is that I think that
Once
crypto's time to lead is actually coming very close here, because now seeing a gold rejection here basically means that we are getting close to the Bitcoin leading phase, because that is what we have seen all the time. Once gold basically puts in a local top this cycle, like we have seen a few times, that's the phase where Bitcoin eventually catches up with gold. So I think that could be happening once again here in the ending stage of the cycle. gold shall top here, so then crypto can work it. Yeah, and I think also the timing is pretty interesting because of course we have on the 29th, so actually in 7 days, we also have another FOMC meeting coming up. I will quickly put it on here. So yeah, if they are going to cut more rates, then maybe we are going to transition into somewhat of a more risk-on period in the market, like we have been discussing, because of course we have about 100% chance that during the next meeting we are going to see another rate cut. So it is definitely going to get interesting with seeing gold here, basically putting in somewhat of an top. It seems like. Let's see how this is going to continue. Of course, we could also just head higher in the near future, but let's see. Bitcoin versus gold pair is very oversold. That's also what we did discuss. Every time we were this oversold for Bitcoin versus gold, we saw a period of outperformance for gold or for Bitcoin follow afterwards versus the gold price action. I think the 4-year cycle might not be relevant anymore. We are going to see all of this in the next few weeks, if it's going to be relevant, because according to the 4-year cycle, basically the Bitcoin top should be in any moment now. I can show you that here, Bitcoin halving cycle progress. Look at this. But yeah, in 27 minutes we have the conference also for the people new joining in. 27 minutes we can discuss some charts first. Here with basically Bitcoin since the halving, you can now see that the time since the halving, and also this corresponds with the 4-year cycle, at every single time in this period after the halving, Bitcoin did find a cycle top following the 4-year cycle pattern. So this is going to be the period in the market, the phase where if we are going to see in Bitcoin 4-year cycle top, it should be happening quite soon. Probably in November. That's what happened in 2021. But yeah, maybe this time already in October. We don't know yet. We are going to have to see this in the next few weeks here. We are definitely going to get an answer. So let's see. Of course, my Ethereum trading position also still open. Maybe that's interesting to discuss because I still have this position open here on LBANK. Actually, I have added some more funds to my account. So I will be opening a bigger position. I'm looking to build up the position size to about 50k. But yeah, I'm also patient, and I think we could still see a drop lower for the crypto market before eventually heading higher, a final wave. So that's why I have my limit orders open for ETH here, and I will be patiently waiting because I think now, looking also at the short-term Bitcoin price action actually, if we look for example at this rejection for Bitcoin, and also at this important resistance level, looking at it, for me it's still a little bit risky to scale in more at the current levels. I think we could drop a little bit lower, but let's see about exactly that. Maybe not, but then I'm also in my Ethereum position. It doesn't matter that much for me. I'm exposed to the market, so I will be making a profit if we are going to move from here. Otherwise, I will stay adding more. All this manipulation is much. I don't know if it's pure manipulation. I think what we have seen for the crypto market in the last days, maybe 1.5 weeks, is that after a big liquidation event, we just see consolidation like this. This was to be expected. This happened all of the times after big liquidation events. You do see somewhat of these weird consolidation periods where a lot of people are also getting shaken out because of the volatility. The market is very volatile. So yeah, it was to be expected in my opinion. We also discussed that a few times. I do think if Bitcoin is going to initiate a move, for example, first of all above this resistance level, it could go quite fast because we have some major liquidation clusters stacking up at the 114k level and the 116k level, and then above the 120k level we also have a lot of liquidity. So once Bitcoin is going to start moving and it could be squeezing out some shorts, it could happen quite fast. So let's see about exactly that. I do think we are having some very important days ahead of us, I would say. So yeah, I'm closely watching the Bitcoin price action mostly for my Ethereum trade, because I do think for my Ethereum trade to perform well, Bitcoin first of all has to outperform once again. Some liquidity should be flowing back to Bitcoin, after that back to Ethereum, and after that back to altcoins. That's what I personally think. And in that phase, I think our Ethereum trade can perform quite well. And guys, if you do want to join me with this trade, make sure to check out LBANK, where you can claim the 20% deposit bonus and win some Apple products. You can find the link here in the description on this update video. And over on my X, I'm also hosting a 1k giveaway in trading funds on LBANK, but then you have to comment on my X post So make sure to also come on over to X. Also, that link is in the description here. But back to the conference. Conference starting in about, what is it? 23 minutes from here. So yeah, it's going to start then. We will be live streaming it. I have the live stream ready here, so I will just put on the live stream. We can watch together. If I have something very important to say, I will just come in. But I think it's going to, I think the live stream is going to speak for itself, basically. Because I'm very curious. I heard that Powell is not speaking. So that's unfortunate. I think some other members of the Federal Reserve Board are going to speak. But yeah, let's see about exactly that. Nobody exactly knows, of course, how this conference is going to look like. Back to some charts. Let me look into what we may have not discussed yet. Also, guys, feel open to ask some questions in the chat. You can always do so. That's what the live stream is for. If I can help with something or just can give my opinion. I can't join your Telegram channel. Why not? Maybe because you already have a WeX account or something. I don't know. Yeah, you need to sign up with a WeX account. That's indeed the only way. For Bitcoin, just to give a clear overview of what I think, my standpoint is still bullish for Bitcoin, but I'm also seeing, of course, the weakness on the short and somewhat of the longer and the bigger perspective here. Also, once again, getting injected from the bull market support band, which I do want to see a reclaim of in the near future. But just to say, I think that the 50 daily moving average is going to be our most important level, because from off this level, Bitcoin has been bouncing this entire bull market, basically. So this is going to be crucial to be bouncing from here in the near future. Otherwise, I think we could be in for a bear market, because also that is exactly what happened last time in 2021, once we broke below this level and retested and then broke even lower. So yeah, that is what I'm currently seeing for Bitcoin here. I'm just keeping my eyes on this level. I'm open for a liquidity grab under the 50 daily moving average before heading higher, because that is something which happened a few times, basically shaking out all of the traders. But yeah, I don't want to see it drop much lower, because then I think the bull market is going to be in danger. But as long as this is not going to happen, I'm going to remain bullish, because actually opening positions here from off these levels, that's something that has always been very profitable this entire cycle. Just look at the entries we've gotten here at these levels. Basically, the biggest moves for Bitcoin have been getting initiated from after 50 daily after also a liquidity grab. So very interesting levels, I must say. Of course, I will keep you guys up to date. And let's see about exactly that, how it is going to end here. Let's talk about TON or Dodge. I'm not going to talk about specific altcoins, since we will be watching the conference. I will just do a market overview. Yeah, I have one already. Yeah, you can make a second WeX account if you really want to join and transfer over your funds. But of course, you should know yourself, know your financial advice. But that would be the only way to join then, to be fair. If the 4-year cycle will outdate, I think we will have only bull markets, but with huge manipulated shakeouts. Now, I don't think we will always have only bull markets, because in the end it's about liquidity and the liquidity cycles. If there's not a lot of liquidity available, then we are going to have bear markets. If we are going to see a global financial crisis, we are going to have bear markets. I think the bear market is going to return. The only question is when. And that is why the 4-year cycle comes in play. Do you exactly believe that it has to happen once again now, with also the Federal Reserve cutting more rates? In the upcoming meetings, 2 rate cuts to be expected still. Another conference. Yeah, let's see. I don't know what exactly is going to be. Digital payments means CBDC, right? Or is it about RWA? I've heard it's about Bitcoin and crypto. That's what I see everybody stating and talking about. And it's also what ChatGPT was saying to me this morning. So let's see. I think there's also maybe a chance that it will be about stable coins, I would say. So a CBDC, I don't know. Yeah, it's of course a stable coin, but quite a controlled one, of course. RWA, maybe. I don't think so. I think it's more about the payment aspect. And RWA, I don't know if maybe that's somewhat of a different subject, to be fair. Ethereum versus Bitcoin pair also looks very interesting, in my opinion. I think that for Ethereum versus Bitcoin, the charts are going to look a little bit scary in the near future for most traders. Because something we have not seen yet for Ethereum versus Bitcoin, this entire move up is basically a liquidity grab under the bull market support band. And here, Ethereum versus Bitcoin saw a retest of the bull market support band. In the same way, the Ethereum versus USD pair saw it. What I think, once Bitcoin is going to take the spotlights in the near future, Ethereum versus Bitcoin could drop a little bit lower, and then eventually we're going to head higher, because that's also exactly what happened here before the major move up for Ethereum versus Bitcoin. And I think we do need to see another Bitcoin move. It doesn't have to be to new all-time highs, but you do want to see a strong move for Bitcoin, close to new all-time highs. Deposit bonus on LBANK can only be used to cover losses after you don't have your money. So first, before I can take, So first I have to lose all of my money before I can take advantage of the bonus. I have no idea. The deposit bonus that's not how deposit bonus works, I think. I think you're talking about the cover loss bonus, which was another, how do I say this? Another offer from them. I think the deposit bonus is not this. If you do have problems like this, make sure to send me a message on Telegram. You can find it in the description here under the video, because I don't think that is how it should work. And if that is the case, I will make sure the team will let you know. More like stablecoins, I guess. Yeah, I think so. I don't really think it will be Bitcoin. They give you the deposit bonuses as well as compensation for lost days. They are separate. Yeah, I thought the same, but maybe something is going wrong. I don't know. Apparently, Sergey Nazarov, founder of Chainlink, will speak there as well. So if true, then it appears definitely crypto related. Yeah, that would be very interesting. Very interesting. Where did you hear this? Actually, let's verify this news somewhere. Because it's very interesting. Sergey or Crypto Payments Conference. Where did you see this news coming out? Fed to host Payments Innovation Conference. Access at Chainlink, BlackRock, Coinbase, Google Cloud. Gee. Whoa, this is insane. I quickly will grab my phone because I need to post about this also. That's quite insane. Then it's going to be a very interesting conference, I would say. Let's go back to the Wolf of All Streets. I see. So a lot. Chainlink, BlackRock, Coinbase, Google Cloud, BNI, Circle, Paxos, Franklin. So basically all of the biggest asset managers in the USA are there. Insane. That's quite insane. Okay, then we should be hyped for this conference, I think. It's about to start in 15 minutes. 15 minutes. I will quickly post this one on our channels also. Because I did not know this yet. Okay, then we are definitely in for some interesting stuff. Very interesting. And it will be live streamed, so we can watch all of it. But yeah, if the big players, the big asset managers are going to talk, it is always going to be interesting. But just look at the names. It's insane. Are you into meme coins? Do you plan to rotate into any later on? I'm not really into meme coins that much, I must say. And I'm also not planning to rotate into meme coins, to be fair. And I think meme coins also have seen maybe the best part of the cycle. So I think there's more upside for utility in the ending stage, to be fair. Okay, I will just post this on my X because then we can talk about it. Boom. Because this was some alpha in the comments, I must say. Boom. Let's go back. There we have my tweet. Featuring the top executives of Chainlink, BlackRock, Coinbase, Google, and a lot of other very big companies. Stripe also, very interesting. So let's see. It's going to be an crazy roundtable. I feel like. Um, Conference about to start in 12 minutes. Let's discuss some more charts then. Before we are going to be heading in the conference, I will live stream it. I will also put my sound off then, and if I have something very important to say, I will come through. But I think it's important for us all to just watch the conference itself. I was talking about Ethereum versus Bitcoin. Here may be important for some people. My Ethereum top targets, I do get a lot of questions about this one. What levels are you targeting with your trading position? What should I be doing? Where am I going to cash out? How are you going to cash out? A lot of different stuff. Me personally, I've been using the Fibonacci retracement levels, basically this entire move up for Bitcoin. We have been perfectly predicting it since the bottom, basically. All of these Fibonacci levels have been corresponding with major support or resistance in the markets. And like I've always been stating, at that reaccumulation phase, a retest of the 4K level or just below or slightly above, that was going to be an important level for me to look if there was a possibility to open a position, and that's exactly what I'm doing now. I'm slowly DCAing in, so I did not enter my full position size here in this consolidation phase, because that is how you get wrecked, in my opinion. What I did is slowly scaling in. I'm still doing so. I will be scaling in more in the near future. But with the trade, I'm targeting the 1.6.8 and the second Fibonacci levels, which do have price targets of 5.3 and 6.4K. So that's what I'm looking at, and I will be scaling out at and in between those levels. And then I think we can catch quite a big trade actually here in the ending stage. So very excited about exactly that. And like I said, if you do want to join me, make sure to claim the 20% deposit bonus on LBANK with the link in the description here under this live stream, basically. I can also go to the live stream itself. That's maybe a little bit better. Are you French? No, I'm Dutch. I'm not French. Quite a big yeah, here you can find the link also. It should be working. Amazing. There you can join. There you can basically claim your bonus. Let's see if we have a little bit more. Like stated, I don't want to see that level lose. Bitcoin actually moving up a little bit here. Interesting. Of course, this is also what I talked about this morning. What I do find very interesting now in the market is that Bitcoin is clearly lagging behind gold and the stock market now. And I do find this so interesting because usually we do tend to follow eventually. Gold, of course, has been moving higher for quite a long time. But now, also if you look at the US stock market and simply the crash we saw during the Trump tariffs, same can be said for Bitcoin, of course. We saw a major crash, but Bitcoin just recovered a very little bit. And the US stock market is basically almost back at new all-time highs. Also, the market open in... Or did the market just open? Let's see. But yeah, that's going to be an important one also. If you accusing a European of being French is an insult. If you compare gold and Bitcoin, they seem to be alternating. One consolidates when the other runs. Yeah, that's what we have been talking about in this update video. It was also actually a lot of people did watch this update video. But yeah, we have the Bitcoin leading phase and we have the gold leading phases. So gold now, it seems like we are putting in somewhat of a local top, and that's going to be very interesting, I think. We have 8 minutes left before the conference. So I am getting very excited. Let me see if we have some news dropping on the markets. Nothing that much. Here we can see that gold is now 5% down since the all-time high. No, I don't see news coming out yet about the conference. Nothing yet. Just take a quick sip of water. Sharplink Gaming buying the dip. Okay. No, not much else coming out. But yeah, let's see. We have a lot of heavy hitters coming up in the conference. And then, yeah, probably it's going to be somewhat of a round table. But all of these large asset managers and Chainlink, interesting one. So many big names. This should bump over crypto 10x. Let's hope so. Interesting comment. Let's see. Some very big names. Let's see what Bitcoin is doing just before the conference. I'm very curious if Bitcoin is going to see some price action based on the conference. What do you think of the Bitcoin targets of Crypto Rover? I think they are very realistic, to be fair. I can fire myself in this analysis that he thinks we could be dropping a little bit lower before eventually heading higher. And we have to be honest, we are quite far away in the cycle. I've been seeing a lot of signals lately that indeed the Bitcoin demand is vanishing. It's looking harsh. I think there's going to be a good chance that the 4-year cycle will play out once again. Or we have to see like a very big demand spike in Q4. And of course that could happen, but we have not seen it yet. And now all of the on-chain data, basically all of the indicators that are very important, are saying that indeed we are a little bit overextended for Bitcoin. So Rover stated that maybe we don't have to make new all-time highs. Could be the case. But what I think is that we should see a bounce, quite a big bounce for Ethereum and altcoins to put some new impulse or put some new life back into the market. And that could be a catalyst of more, I think. And yeah, we just have to see it. We have to see this in the next 2 to 3 weeks. It's going to happen fast. And if not, then it's going to be dangerous. But as long as we are going to stay trading above the 50 daily for Bitcoin, then I think we are looking good. I don't think a bull market or a bear market is going to get started from there. Only if we drop below it, just with a confirmed weekly close. If we put in like 2 to 3 confirmed weekly close above of below the 50 daily, yeah, then it is going to get interesting. Conference in about 5 minutes, I think. I will also quickly confirm on ChatGPT on my phone if it's truly in 5 minutes. How late is the Fed crypto conference? Or I will also do a post on my X. Just a minute, guys. 4 minutes before the conference is going to get started. Okay, just did a quick post here on X because it should be starting in 3 minutes. Yeah, ET is now 8, starts at 15 hours. Yeah, right. Okay, yeah, then it's indeed in the next few minutes here. Let's go. Let's go, let's go, let's go. We have the conference here, so once it's going to get started, I will switch over to the conference stream. What's happening, Goose? The Payments and Innovation Conference from the Federal Reserve. So nice to have you back, by the way. And we have a lot of big names speaking. This is something we just saw coming out here together. We have a lot of big names speaking, a lot of big asset managers, big companies, so it is going to be interesting. And let's see what exactly from of this conference they are going to live stream. I'm very much interested and curious to see what it is exactly going to look like here. But it is going to get started in 3 minutes, so I would just wait here and keep my eyes on the news if something's going to get in. Let's see. Let's see. Janik has been sneakily appearing in the fine print of government documents for around a year now, so this may be big. Yeah, maybe. It could be very bullish for Chainlink. It's the only big project I see between them, like with the token. So interesting. Let's see. 2 minutes and then the conference is going to start. 2 minutes. Let's go. Let's see. I was also a little bit surprised that they were even going to live stream the conference. You don't see that all the time with stuff like this. So super excited. Let's go, guys. Are we excited or not? Finally something is happening again. Finally. Let's see. Should be starting in 1 minute. We do see some delay sometimes with the streams, I must say. Normally it's going to get live 2 minutes later or something. Let's see. Some nice music. So nice. Yes, sir. What's happening? There we go. Let's hope for some volatility. Let's see what Bitcoin is doing just before the conference. Just before we dive in. Moving up ever so slightly. We should be going live any moment now with the live stream, so be tuned. Make sure to stay watching. 100 watchers also. Thank you so much, guys. Yes, there we go. Okay, I'm going to switch over to the stream. I wish everybody a very nice live stream, and maybe I will be tuning in if I'm going to hear something very important.
So good morning and welcome. We're very excited to have everyone here. My name is Susan Foley, and I am a Deputy Director in our Payments Division, and I'm going to be leading you through today's events. So I'm very excited to have everyone and learn from all of you and your experiences. We're going to have 4 panels today covering key issues on payments innovation. They're going to cover things such as tokenization, AI in payments, stablecoins, and the use of digital assets in traditional finance. You can also expect to have plenty of time, just like this morning, to mingle and meet each other, folks you haven't met before in the industry, as well as Federal Reserve leaders. And speaking of Federal Reserve leaders, few at the Fed are more focused on these issues than Chris Waller. He has long-standing interest in new technologies and innovations in payments. As an academic, he wrote extensively about monetary theory and its intersection in payments issues. He has studied Bitcoin's early potential as an alternative currency and stablecoins' impact as a like payment instrument. In 2021, as a new Federal Reserve governor, he gave a speech on CBDC called A Solution in Search of a Problem. It proved foundational in terms of the topic and the discussion of that topic. Governor Waller is chairman of the Fed's Payments Committee and has given many speeches about payments, stablecoins, and DeFi. And now it is my pleasure to introduce Governor Chris Waller.
Good morning. All right. Well, thank you, Susan, and good morning to everyone. It's my pleasure to welcome you to the Federal Reserve Board for our first Payments Innovation Conference. My objective in creating this conference is twofold. First, I wanted to have a conference that focused on the new technologies that had come from the DeFi and crypto worlds and how they are entering into the mainstream payments ecosystem. My goal is to have a vibrant discussion about payments between traditional payment incumbents and the new entrants from the DeFi world. Second, I wanted to send a message that this is a new era for the Federal Reserve in payments. The DeFi industry is not viewed with suspicion or scorn. Rather, today, you are welcome to the conversation on the future of payments in the United States and on our home field, something that would have been unimaginable a few years ago. My view for the Fed from now on is embrace the disruption, don't avoid it. As you know, we are well into a technology-driven revolution in payments, and I'm here to say that the Federal Reserve intends to be an active part of that revolution. A number of technological advances are transforming the payment system. Stable coins and tokenized assets making use of distributed ledger technology. The rapid adoption of artificial intelligence AI, and increasingly the convergence between these innovations and the traditional financial ecosystem. This includes the institutions and infrastructure that our economy has long depended on to operate a safe and efficient payment system. And yes, this also includes the Federal Reserve. The revolution in transforming payments is demanding change everywhere. And I will say more in a moment about some new ideas that the Federal Reserve is studying to support those innovations. I have spoken before of what I see as the two broad models of payments innovation in our market economy. The first is private sector-driven innovation. Most innovation comes from the private sector, which is motivated and best positioned to allocate resources and take risk with new technologies. The second model is when public sector entities, such as the Fed, build platforms and provide services that enable the private sector to more readily and rapidly expand new services to its customers. This should be done rarely and in limited circumstances where it addresses a specific market need. The posture of public institutions, including the Federal Reserve, should be to acknowledge and embrace private sector innovation that can improve the payment system while preserving its safety and stability, which are as essential to the new generation of innovators as they are to legacy institutions. Now let me pull back a moment and remind everyone how we got here. Since nearly its founding, the Federal Reserve System has worked to facilitate payment and settlement system efficiency alongside the private sector. From the beginning, the clearing services provided by the reserve banks obviated the need for daily movements of cash in armored cars with heavily armed guards. Long before we started speaking of the payment rails that are facilitating the kind of innovation we'll be discussing today, the Fed was running trains on steel rails to deliver and clear paper checks traveling across the country. FedWire began conducting interbank transfers through telegraph wires in the early 20th century. Fast forward today, where we have multiple infrastructures that settle interbank transfers in real time. Today's conference will focus on private sector-driven innovation. We have assembled 100 private sector innovators who are leveraging cutting-edge technology to create new possibilities in the payments landscape. Our panelists are engaging in integrating traditional financial payment rails with distributed ledgers, developing new products and services in the digital asset ecosystem, and leveraging AI in the payment system. It's worth noting that the firms engaged in these activities include banks, asset managers, retail payment firms, technology companies, as well as crypto-native fintechs. This is an acknowledgement that distributed ledgers and crypto assets are no longer on the fringes, but are increasingly woven into the fabric of the payment and financial system. Now, before we hear from these innovators, I would like to touch on roles that the Federal Reserve plays to support the private sector. These include serving as a convener to solve coordination problems and operating core payment and settlement infrastructure. We are also looking ahead, conducting hands-on research on tokenization, using smart contracts, and the intersection of AI and payments for use in our own payment systems. We do this to understand the innovation happening within the payment system, as well as to evaluate whether these technologies could provide opportunities to upgrade our own payment infrastructures and to enable us to have deeper conversations with the industry on these new technologies. While this is a good start, I believe we can and should do more to support those actively transforming the payment system. To that end, I have asked Federal Reserve staff to explore the idea of what I'm calling a payment account. Today, Federal Reserve banks provide access to master accounts and financial services to legally eligible entities following our guidelines for evaluating account and services requests. The payment account would be available to all institutions that are legally eligible for an account and would be beneficial for those focused primarily on payment innovations. This payment account concept would be targeted to provide basic Federal Reserve payment services to legally eligible institutions that right now conduct payment services primarily through a third-party bank that has a full-fledged master account. There are many eligible firms engaged in substantial payments activities that may not want or need all the bells and whistles of a full-fledged master account, or access to the full suite of Federal Reserve financial services to successfully innovate and provide services to their customers. The idea is to tailor the services of these new accounts to the needs of these firms and risks they present to the Federal Reserve banks and the payment system. Accordingly, and importantly, these lower risk payment accounts would have a streamlined timeline for review. Payment innovation moves fast and the Federal Reserve needs to keep up. To be more concrete, let me describe a possible prototype that I've been considering for this type of payment account, or as I sometimes call it, a skinny master account. The account would provide access to the Federal Reserve payment rails while controlling for various risks to the Federal Reserve and the payment system. To control the size of the accounts and associated impacts on the Fed's balance sheet, the Reserve banks would not pay interest on balances in a payment account, and balance caps may be imposed. These accounts would not have daylight overdraft privileges. If the balance in the account hits zero, payments will be rejected. They would not be eligible for discount window borrowing or have access to all Federal Reserve payment services for which the Reserve banks cannot control the risk of daylight overdrafts. Now, I want to be clear that this is just a prototype idea to provide some clarity on how things could change. The upshot is that, in my view, the payments landscape, as well as the types of providers, has evolved dramatically in recent years, and accordingly, a new payments account would better reflect this new reality. As Federal Reserve staff examine this idea, we will engage with all interested stakeholders to hear their perspectives on the benefits and drawbacks to this approach. So you will be hearing more about this shortly. So let me wrap up here so we can get to the really exciting part of the conference, not me blabbering, which is about innovation and the future of payments. So thank you to the panelists who took the time to participate, those in the audience who agreed to be here, and the many others watching online. And a special thanks to Fed staff who moved incredibly fast to pull this event together and fit it into a very busy fall schedule for the Fed. So on with the conference, and thank you for being here.
Thank you, Chris, for starting us off. So I'm going to introduce the first panelist to come on up while I give a few housekeeping items. All right, here they come. So as a reminder, Chris mentioned we are showing this online so that others that can't be here today can follow along with the exciting program that we have. We will also be using Slido. So when you came in, you should have received a folder. Within that folder, there is a QR code and link within it. We're going to ask that folks submit their questions for the panelists using Slido. And the question and answer window will be open throughout the whole panel to submit questions. You guys can come on up. Also, if you need Wi-Fi access right outside that door, there is a desk and someone can help set you up with that. And lastly, folks today who are wearing blue stripe on their name tags, you can ask them anything you might need and they will try to help with whatever you need. Okay, it looks like our panelists are getting set up. Okay, so our first panel will be bridging traditional finance with the digital asset ecosystem in their conversation. Our moderator is Rebecca Rettig, and she will be leading us through this first topic. Rebecca is the Chief Legal Officer at Jito Labs, a software company that builds critical blockchain infrastructure and DeFi applications for the Solana network. I will now turn it to Rebecca to start us off. Thank you.
Thanks so much. Good morning. Thanks to everyone for being here. It's my privilege to kick off today's conference with a panel about the convergence of our traditional financial system with a new system called decentralized finance, or DeFi. Before we jump into substance, I want to thank Governor Waller, Sunaina, Alex, Ria, and everyone at the Fed for convening us to discuss the evolution of our payment system. This type of forward-thinking, collaborative event allows us to ensure a cutting-edge and safe financial system and to ensure that the U.S. economy remains competitive. Starting the day with a DeFi panel is brave. It shows a willingness to engage with one of the thorniest questions on innovation: whether and how traditional financial institutions and traditional financial services will and can evolve with the advent of an intermediary-less technological system. Although there's not a universal definition of DeFi, in fact, regulators, policymakers, and industry cannot agree on one, I'll provide a brief definition for purposes of today's panel. DeFi is a software system that runs on permissionless blockchains and allows individuals and institutions to engage in economic transactions without an intermediary. There's been a lot of talk over the years about whether this new intermediary-less system can or will disrupt or replace TradFi. Very recently, ICE Chairman Jeff Sprecher spoke of his rationale for a recent investment in and partnership with a company building a widely used DeFi application called Polymarket. Mr. Sprecher said that ICE made the investment so, quote, "we don't get disintermediated." Two important things on this. First, unless you're really in the crypto industry, you're unlikely to even know that Polymarket is DeFi or even that it's built on a blockchain. Second, as of today, the total value locked in all DeFi applications comprises about 4% of the total crypto market and significantly less than 1% of GDP. In other words, there's an acknowledgement that DeFi has great potential to bring new disruptive features to traditional payments and financial services, but there is also a very long road to go. This road is paved with new technology. To that end, today we'll discuss the current state of DeFi technology, whether and how TradFi can use and integrate with it, and where we'll go in the future. This panel will also tackle the incredibly important questions relating to stablecoins' critical role in the DeFi ecosystem and examine tokenized deposits, as well as DeFi's potential future role in bank liquidity provisioning and liquidity services. The DeFi TradFi disruption question is unlikely to have a singular answer, and instead will, as the title of this panel notes, require bridges. Governor Waller said it well in his recent remarks at CBOS on the next frontier of payment innovation. He said, "Innovation is not an issue of TradFi versus DeFi, but rather poses an opportunity to harness the complementary strengths each has to offer, especially at a time where we are seeing increased convergence between the two." Today's panelists are at the forefront of this convergence, and I'm looking forward to facilitating the discussion among them and letting them introduce themselves now, and then we will jump into questions. Sergey, do you want to kick off?
Yeah, sure. Hi, everyone. Good to see many. Sorry. Hi, everyone. Good to see many of you again. Chainlink, on the topic of DeFi, powers approximately 70% of DeFi globally and over 85% of DeFi on top chains like Ethereum, providing data and other key services to make sure that the infrastructure underpinning the transactions and operations of DeFi are correctly executed. We also have a lot of experience working with stablecoins, powering their proper execution, basically. We're the largest provider of proof of reserves, which is the technology that stops over-minting events and incorrect minting of stablecoins, which I think will be particularly valuable this new stablecoin environment. We're also the most reliable provider of bridging technology for the capital markets, working with large organizations like SWIFT, the DTCC, JP Morgan, UBS, and others. So we cover the gamut of both powering the DeFi community and now well along into powering the capital markets transition into the, just like 5 different names. The digital asset, new revolutionary thing. So yeah, that's what we do.
Great. Jackie?
Hi, everyone. I'm Jackie Reeses. I'm the co-founder and CEO of LBANK. We have bank in our name because we own an FDIC-insured bank in Kansas City, Missouri. I started the company in 2022 after leaving Block, where I ran financial services, so all the regulated products there, and have also been involved with the Federal Reserve for 10 plus years. So I know a lot of the folks in this room, first through San Francisco. LEAD is an infrastructure provider. We build infrastructure for fintech, crypto, consumer companies, and e-commerce companies, many of whom are the largest companies in the world, and all names that many of you know. We're an underlying infrastructure provider. We don't really have a consumer brand. And so as much as we power a lot of the products that you all interact with, you would only really see us show up through disclosures or through an announcement. And that might be Stripe. I know someone from Stripe is in the room. It might be Revolut. It might be Ramp. It might be Affirm. It might be Walmart. And so we work with a lot of different types of companies to provide their underlying infrastructure. I'm very happy to be here.
Thank you for having us. So my name is Michael Shalov. I'm the CEO and co-founder of Fireblocks. We provide infrastructure, digital asset infrastructure for financial institutions, basically a technology as a service. Our main customers are bank, fintechs, and other financial intermediaries that are involved in digital assets, stablecoins, and crypto. Been doing that for the last 7 years. We are servicing over 2,500 financial institutions today. And essentially the infrastructure has 2 components. One is basically what you will call wallet or custody infrastructure. So we help folks like Bank of New York Mellon and others to create the custody technology for them to store digital assets. We also have the Fireblocks network that helps people to coordinate the settlements over 100 blockchains that we support. So through this infrastructure this year, there will be more than $5 trillion worth of digital asset value that is going to be transferred. With regards to DeFi, among kind of the category of the different institutional wallets, custodians, and basically that broad category, we were the first one that created an offering back in 2020 to interact with various DeFi protocols. And along the way, we basically kind of were helping with the challenge that traditional financial institutions and regulated entities have in terms of accessing DeFi. So I think we have a lot of experience in discussing about the topic we're going to chat about today. Thank you.
Good morning, everyone. I'm Jennifer Barker. I lead 2 businesses for BNY. I lead the Treasury Services business, and I lead the Depository Receipts business. And first, I'd like to thank Governor Waller for bringing us here today and the rest of the Federal Reserve. This is a really important topic, and the discussion is timely. We are at a really unique and extraordinary juncture. We have breakthroughs in distributed ledgers, tokenized assets, artificial intelligence, all of which are reshaping the payments industry, not only here, but across the globe. And these technologies, they promise payments that are faster, more secure, and more inclusive than ever before. But traditional services and traditional service providers still provide scale and regulatory standards and expertise that underpins every transaction. So today's shift isn't about blockchain technology immediately replacing traditional systems. It's about the two coexisting, and that's really where true transformation lies, on getting those networks to interconnect. So our task is to unite these strengths as they complement one another. Layering digital asset innovation onto proven financial systems will unlock greater efficiency, liquidity, transparency, security, and financial inclusion. Key tenets here are important to resolving delivery around real-time payments, data-rich payments, and modernizing for resiliency, security, and industry collaboration. So success will depend on the close collaboration amongst all of us, banks, fintechs, service providers, regulators, to build clear standards, resilient infrastructure, and responsible risk frameworks. So at BNY, we are committed to innovating by investing deeply in research, modernizing our infrastructure, and championing clear, adaptable frameworks that encourage responsible innovation.
Okay, great. So now we'll jump into it. As you could hear from everybody's introductions, obviously infrastructure and the technology itself is really the critically important part. So we're gonna really try to delve deep a little bit on the technology to start. And we're gonna start with the question of interoperability, which means the ability for various computer and software systems to share data and make use of it across different systems. Sergey, we'll kick off with you, because obviously interoperability is key to what Chainlink has built. They've built the Cross-Chain Interoperability Protocol, or CCIP, which is software that allows users to provide information across various different blockchain networks, so Ethereum, Solana, and many others. But how is CCIP currently being used, and you alluded to this a little bit in your introduction, by traditional financial services firms who are integrating digital assets into their offerings?
Yeah, sure. So I can't seem to get that right. Not
I'm
good
a
at this.
full-service moderator.
I wouldn't last long at the Fed. I can't even get this right. Yeah, so there's like two dimensions to interoperability in the TradFi world because of the existing investment in systems. So the first level of interoperability is getting the existing systems to work with chains, the existing data sources, the existing backend systems, the existing messaging standards such as SWIFT. All of these existing systems need to become synchronized. And this is where you hear terms like digital twin and fund tokenization and other areas. So there's one level of problems where you have to synchronize existing data, existing backends, existing messaging standards with the chains, right, for basic operations. And our position is that those existing systems are not going to be going away. There's a huge investment in them. They're highly regulated. They meet legal requirements. They meet a lot of very key requirements. So the challenge there is synchronizing them. This is the work we've done with SWIFT, the DTCC, and other groups that power those systems in big ways. The second level of interoperability is the cross-chain level, and that's because you have a lot of fragmentation, and that's happening because the cost of generating a chain is becoming lower and lower. So as the cost of generating a chain is cheaper, and as it's easier and easier for more institutions to make chains, there will be more chains. Also, there's various fee dynamics and other benefits to having your own chain. And there's also more and more public chains as long as VCs can make money from flipping a public blockchain coin. So as long as VCs can fund a public blockchain coin, and as long as that public blockchain coin can return a large amount of capital to them as a result of their initial investment, you can expect more public chains as well, because that's a very attractive, financially attractive business model for many people. So there's more chains. More chains creates siloed capital. Siloed capital creates risk and creates limitations to market growth. So you need standards, you need standardized ways to synchronize the existing systems and to synchronize the chains as they grow in amount and fragmentation. So that's what we have a lot of experience with. One of the main challenges that we found in working on that, different from doing it in the DeFi community, doing it in the capital markets community, is there's a lot of requirements around compliance. There's a lot of requirements around accounting, books and records, and all these different requirements that a transaction has. So the challenge in the capital markets with interoperability is not just connecting two systems, whether they're an existing system to a chain or whether it's a chain to another chain. It's getting the connection to result in a transaction that meets the books and records requirements, that meets the compliance requirements, and that meets whatever other requirements the regulator or the counterparties may have from the transaction, right? So that's the challenging thing, really, is making the transaction actually happen against all of those, accounting, compliance, identity, regulatory requirements. I'm really thrilled to see events like this. I'm really thrilled about the SEC's new direction and the CFTC's upcoming direction because that'll simplify that problem. But there will be a period of probably 2 to 5 years where you have to create a kind of hybrid system where the old requirements through the old systems still need to be met, but the new system needs to meet them. So that is kind of the challenging thing for transactions, I would say, in the next 2 to 5 year period, that are interoperable in the senses that I described.
Makes sense. Jackie, and my questions go down the line, but I didn't know the way we were going to sit. So, but do you think that the banking system can actually just to turn this question a little on its head, can the banking system manage the fragmentation of all of these chains that Sergey was alluding to? And how does the technology need to evolve from the digital asset side to be able to be used by banks and traditional financial services firms?
Yeah, well, I'd say in listening to that, it actually sounded like the banking system, and so I laughed in the back of my head as I was listening to this idea of extreme fragmentation, siloing, and the need to actually do compliance. That sounds eerily familiar as someone who owns a bank. But I think today, the banking system is not at all ready for it. Like, you have 2 banks represented here. Like, we're probably one of the biggest infrastructure banks in the US that deals with crypto and stablecoins, and Bank of New York is certainly one of the largest institutions that's like the gold standard for holding reserves and managing the crypto industry. And so you probably have 2 of like 10, I would say. Having said that, there's a bunch of things that banks have to deal with that I think are probably the most likely use cases to hit banks at first. One is wallets, and that's consumer-related wallets. The second is infrastructure. I think on the infrastructure side, you're seeing that evolve today, and that's infrastructure of dealing with BIN sponsorship, moving money, storing money, and kind of the overall management of on-ramps and off-ramps. And I think that infrastructure has actually been established by players and operates quite well within the system today. I know we work with over 150 plus crypto companies, hundreds of accounts, tens of billions of dollars of money that flows through on a fairly regular basis. That happens very fluidly following all the KYC rules that are required and all of the institutional knowledge that we've had for 90 years of developing a banking system in the United States around like core banking law. So that exists today. On the consumer wallet side, I'd say that's probably the least sophisticated, and I don't actually see like a use case today for like stable coins and consumer wallets. No one is sitting there going, I'm gonna use my $25 worth of stable coin at Starbucks. Like that kinda, it's a nice theory, but I don't actually see any transaction volume that's happening on the consumer side. Where you're going to see it, though, is institutions that have moved their infrastructure, and over time, it'll become more prevalent as banks adopt stablecoin wallets, most likely through their core providers, like Fiserv, Jack Henry, and FIS, who will enable it so that you could have interoperability between crypto companies, fintech companies, and core financial services. And so those wallets will be onboarded probably within the next year or 2 by these companies who have been watching Genius Act. But those are the 2 more likely use cases for where it happens. And I think on the stablecoin infrastructure side, you won't really notice it as a consumer. It'll just happen in your payment devices. And those rails will start to get moved first by multinational payments and then second through more domestic payments, largely because the infrastructure has started to move over those rails if, and I say if, there's an advantage in terms of actual cost and speed versus theoretical cost and speed, because we also are having this intersection of FedNow which is a 24/7, 365 payment rail that actually works today. And so users could send a significant amount of money. Adoption isn't that great, but that actually does exist. And so big institutional users are going to debate which rail is actually more economically advantaged in which to send money.
Michael, I want to get to custody and wallet infrastructure in a second, but because of how Sergey teed things off, Jennifer, I'm actually going to ask you, so what liability, counterparty, and settlement finality issues emerge when you're bridging these open smart contract systems that DeFi is built on with these regulated banking systems? No, for you. Michael's coming. Oh, in a second.
Sorry, I thought you said both of us.
No.
Yeah, I mean, I think that's a very interesting question, right? Because you have the question of, an auditable chain and figuring out, and as you mentioned, Sergey, all of the data has to travel with that. So you have the question of finality, and you have the question of revocability, right? And so on chain, things are final, but there also probably needs to be a revocable process, just like you have today with wires and other payment systems. So I think it's a really interesting question of, is it final on chain, but what is the process to really have it be revocable if needed off chain and through the regulatory environment?
Oh, that's very interesting, because I mean, the whole point is for it not to be
Right.
revocable in many ways, although certain, obviously, stablecoin issuers are, I think, thinking about revocability. Okay, so to move to a different part of the infrastructure, but that is just as equally important, as you said, Fireblocks builds wallet infrastructure. And Michael, talk about how the custody broker approach today in traditional financial services contrasts with wallet infrastructure and sort of other digital asset technology, just to set the stage, and then I, of course, have a number of questions.
Yeah, so I think that first of all, when people think about custody, I think what they have in mind is either how banks used to have safes and they would basically store bare assets in those safes, or maybe like, the entire books and records, right, that currently exists in terms of some kind of like, tree that at the top level you have something like DTCC, and then kind of propagates to the various intermediaries that are creating a hierarchy of sub-accounts. The reality is that actually that function in blockchain and crypto is actually provided by the blockchains themselves, by the L1s. They're the ones that are, that's kind of the books and records. And what you do as a custodian or as a wallet provider, or basically the safekeeping element, is actually storing the password, right? Storing the private key that is the instruction to move either an asset from one wallet to another or operate a smart contract on behalf of that account. So conceptually, it's a bit different. On top of it, unlike, I would say, like, in the traditional space that, okay, there is basically one safe, right? You can actually operate much more sophisticated and improved mechanisms to increase the security, right? So instead of having, for example, one private key, one of the things that Fireblocks and a few other folks have built over the last couple of years is this concept of multi-signature or threshold signatures or multi-party computation, but essentially it's a virtual system that distributes the ownership over a wallet, right? So you need multiple parties to actually sign a transaction simultaneously to instruct the movement. And that creates like a much larger or much greater resiliency, right? From both a cybersecurity standpoint, counterparty risk standpoint, operational risk standpoint, compared to modes that you have in the traditional space. So that's kind of one important element that it's quite interesting to bring. I mean, it's actually nowadays when you look at all the crypto and fintech players, they all have adopted it. Also, in terms of most of the retail wallets, they've adopted it, and also I think the banks that have partnered with us, they have also adopted it. But generally speaking, every time that we do talk with bank, especially like, bank IT, it is a fairly complex journey to get them think about how they can enhance their resiliency in that regard. By the way, that type of technology actually proven itself to over the last couple of years to prevent quite a lot of disastrous situations in terms of theft in the crypto space. And I think that part of what we are working on right now is the regulators globally, and I think that the more exciting thing is that we now have the opportunity to work with the regulators in the United States, is to actually bring frameworks, right, similar to what you have in Europe, like DORA, to bring similar frameworks into the US that will help regulators and traditional financial institutions with scoping and understanding how to implement those models, and make sure that as we build or embed those capabilities within the traditional space, we are doing it in a secure and safe way, because it's true, I think, like, Jackie and kind of alluded to that, there is sort of a hump, right, and that's also been our experience working with some of our partners over here, is that there is actually a pretty significant effort that goes not actually in implementing the wallet infrastructure and the custody technology per se, but actually integrating it into the traditional systems. And it's not only integrating in the traditional systems, like just connecting those APIs, it's actually also to evolve the processes and the procedures and how IT is actually going to consume that within the bank. And the reality is, probably won't be surprised, right, that most of the banks, whether they develop their core banking systems internally or they're using providers like the providers that were mentioned over here, those providers and those systems that were built in the 70s, 80s, and the 90s, they're not really equipped to deal with it, not only on the level of the fact that they're doing batch processing once a day, but actually even change management that sometimes expected to take weeks or months, right? You now have a situation that there is a fork on the Ethereum blockchain, and you need to update all your nodes to the fork, right? And you need to do it in the next 60 minutes. And if you're not going to do it in the next 60 minutes, you're going to be disconnected from the main ledger, right? So those processes, those IT processes,